How do we calculate ROIC? The formula for return on invested capital measures how well a company generates cash flow compared to the capital it has invested in the business. Here is the formula, and we will break it down. Return on invested capital equals NOPAT divided by average invested capital. There are 4 components to ROIC. Number 1. We use operating income or EBIT earnings before income taxes instead of net income. Number 2. We adjust the operating income or EBIT by the company's marginal tax rate. Number 3. We use book values for the company as opposed to market values. Number 4. We also need to consider the timing of financials. The capital invested comes from the end of the year, whereas the EBIT remains the current value, i.e., by quarter or annual data. A final note before we dive in. NOPAT stands for Net Operating Profit After Tax, for those who are curious. Okay, now that we know the formula, let's start to find the numbers to plug into our formula. The first company I would like to explore is Microsoft. We will calculate based on the latest annual 10K from June 30th, 2022. The first number we need to pull together is earnings before interest and taxes, or EBIT, or its proxy, operating income. Before proceeding, all numbers will be in millions unless otherwise stated. Operating income, or EBIT, equals $83,383,000. Next, we will need to calculate the tax rate for Microsoft, or you could go to your favorite website and find it. I use GuruFocus.com as my go-to. To find the effective tax rate, we use the following formula. Tax rate percentage equals tax expense divided by pre-tax income. So if we go back to our income statement, we can find our numbers. I will highlight them for you. Let's calculate our effective tax rate from the above numbers. Income tax expense, or benefit, equals $10,978,000. Earnings before income taxes equals $83,716,000. Tax rate percentage equals $10,978,000 divided by $83,716,000. Tax rate percentage equals 13.11%. Okay, now we need to determine our average invested capital. The formula for this will be invested capital equals book value of debt plus book value of equity minus cash and cash equivalents. We do the above calculation for the end of 2022 and 2021 using the 10Ks for each year. The book value of debt will require 2 numbers: total debt and capital lease obligation, minority interest. We will look at Microsoft's balance sheet to find the total debt. For 2021, we add the numbers listed under liabilities. Current portion of long-term debt equals $8,702,000. Long-term debt equals $50,074,000. Operating lease liabilities equals $9,629,000. Next, let's find the minority interest of which Microsoft has none on its balance sheet. From the shareholders' equity section, we would see the line item listed as non-controlling interest, which is the same as a minority interest. Now let's add up our debt. 2021 total debt equals $8,702,000 plus $50,074,000 plus $9,629,000, equaling $68,405,000. Now let's do the same process for 2022. 2022 book value of debt equals $2,749,000 plus $47,032,000 plus $11,489,000, equaling $62,270,000. The next item we need is the book value of the equity, which will be the total shareholders' equity listed on the balance sheet under the shareholders' equity section. 2021 book value of equity equals $141,988,000. 2022 book value of equity equals $166,542,000. The last 2 items will be cash and goodwill from the balance sheet. 2021 cash and equivalents equals $130,334,000. 2022 cash and equivalents equals $104,757,000. Now that we have all our numbers, we can calculate the invested capital for Microsoft for 2021 and 2022. Invested capital 2021 equals $68,405,000 plus $141,988,000 minus $130,334,000 equaling $80,059,000. Invested capital 2022 equals $61,270,000 plus $166,542,000 minus $104,757,000 equaling $108,636,000. ROIC equals NOPAT divided by invested capital 2022 plus invested capital 2021 divided by 2. ROIC equals $83,383,000 times 1 minus 13 and 11% divided by $80,059,000 plus $108,636,000 divided by 2. ROIC $72,451,000 divided by $94,347,000. ROIC equals 76.79%. At this point, let's wait a moment before we analyze what our formula came up with before deciding if Microsoft's ROIC is good or bad.